So, welcome guys to today's class, and we will begin with a word of prayer, and then we will commit everything to the Lord. Then we will begin the training. Everlasting Father, we pray for this class. As we start, we pray for understanding, we pray for wisdom. Help us to grasp. In Jesus' name we've prayed, amen. So, Julius, you can probably unmute and say hi. Then I will begin to share as we continue. Welcome again, Ignatius, and welcome, Julius.
Hi,
Hi,
good to
hi,
find
Julius.
you guys. I'm happy to be together in the class.
Okay. I'm honored to have you also. I just wanted to say, Ignatius was the first again today, so I'll be sending him $3 just to motivate him and encourage him for the next time, and also challenge people like Julius who joined the second ones to try. So yesterday he joined. I was to send him $1 each day, but because he has outdone himself and he's joining us from Ghana, then I have added him $1. So Julius times 150,
Yes,
3. You could have eaten a good meal somewhere, but poorly. We will continue.
because
So Ignatius, the value of
after,
the shilling right now is around 145. I think the last time I checked it was 144.9. I haven't checked it from Friday. I have been busy with the bootcamp
I
and
think
everything. Um,
right now is 144,
okay. So yeah,
4,
yeah.
5, 4, 7, 5, somewhere there.
Okay.
Almost 145. It will round off.
Okay.
Yeah.
Let us just begin. I will share my screen shortly. And today's class is not as intensive as the others. We will begin. Also, we will still have to. Is my screen visible? Yes.
Yes.
All right. Just allow me to how do you set time here? Allow me to just set an alarm for something. Then we just begin in 2 minutes. But thank you so much. I'm honored to have you guys on board. And yeah. Uh, that should do. Okay. Okay. So today's class uh, is the final class of this bootcamp session. So a few things that we'll look at. Just give it time. Let me change this color. Red is scary. Let me give us blue is a bit comfortable. I hear. So day 3, uh, topics to cover on day 3. Sorry about that. Uh, on day 3. Uh, so what we'll do is we will cover and engage on something that's called accumulation, accumulation and distribution. Distribution. And then I will also give us an overview. Just give me a minute. Just give me a minute, guys. I am joining. Just give me a minute. Hello, I am back. Sorry for that. So, I don't know. Are you hearing some background noise? Just to ask.
Now it's clear.
Okay. Um, so we will just start off. Where was I? I was here. So distribution, accumulation. Then I'll give us what we have been learning is smart money. Okay. Uh, SMC, smart money concept. So I will give us the checklist to use every time we are taking trades or analyzing the market. And then the fourth thing that we will look at, SMC. Just put this as smart money concept. And then this is SMC, just the short form, SMC checklist. And then finally, I will give us a number of books that we can read.
Jeudi à partir de 17h, 30 euros.
Hi,
Le
Ian.
jeudi pendant l'échange
Yes.
salarial à la bergerie de 10h à 12h.
Yes. Are you on Telegram?
Diffusez cette semaine le programme
Okay.
comment
Let
comprendre.
me. The
Donc
class
les
has
samedis
begun,
seront là pour vos programmes.
and let me
Le
see.
dimanche matin pour
No, it's a
l'enseignement.
different one.
Le programme
I have
est à
shared
17h50
on WhatsApp.
euros. Le vendredi et le jour,
Uh,
ce sport
so
se
just
termine à
drop.
partir de 18h pour prendre possession du mois de septembre à la soirée d'âme. On va venir prier. C'est
Hello,
clôturer
guys.
le 11e mois
Hello.
d'août. Les fêtes les fêtes
Hello.
chrétiennes de
Can you
Noël
guys hear me?
doivent se souvenir en nous. La maladie
Yes,
va
but the
disparaître.
voice at it is very low and the
And now
background sound.
it's okay.
Yeah, but you can increase volume.
I'm not sure if I can increase volume from my end. Is it better now?
Well, there at yeah, there is okay.
Okay, I have been having a cold, so I'm drinking some concoction. Uh,
You're taking
so
lemon,
I will
lemon
lemon,
what?
ginger, and garlic. You remember the first class I was really coughing, and also yesterday a bit.
Yeah,
So the final thing we look
yeah.
at is books uh, and materials to help us. Okay, just books and materials to help us. Okay, so those are the things that we will look at. So today's class is a bit chilled, and let me just let me just welcome everyone who is joining. Mr. Liquify, I think that's Ian. Um, Mohammed, Muhammad, Karibu, welcome so much for joining us. So we're just beginning. You are on time. So this is just the checklist and the topics we're going to cover. So for today's class won't be so intensive as the other days have been. So it will be a little bit chilled, and we will see what we can do with the time that we have. So we should be done, I think, in an hour 30 minutes. Um, so yeah. So these are the things we're going to look at: accumulation, distribution. It's just like the same thing, but anyway, let's just split it. Then SMC checklist. This is the checklist that we'll use every time we want to take a trade. Then, because trading is a profession, I know in Africa we're not yet there, but it is actually a profession in other parts of the world. So you need to invest in your trading journey, and one of the ways where that can help you to grow is exposing yourself to materials of higher higher quality. I don't know if that's understandable. So I'll just go directly to how we've been doing this. Uh, looking for a tool. this one. So as we can remember, uh, in a bullish market, when we're buying, we begin from the low, we go to the high, then we go to the low, then we go to the higher high, then higher low, then higher high, then higher low, then higher high. Okay. So that's what happens in a bullish market. Okay. And then in a bearish market, we begin from Charles is saying that the link is not working. Kindly somebody can chat him and tell him to just keep trying. I don't know. But yeah. So because others I believe have joined the same link. So in a downtrend market, bearish market, uh this is what happens. This is what happens. So price begins from a high, then we come to a low. Let me just mark this up as we progress. Uh, okay. So in a bullish market, we have a low, then it gives us a high, then it gives us a low, then it gives us a high, then we have a low, then we have a high, and then we have a low, and then price gives us a high. Okay. And then now so these are low, high, lower low, because this low is higher than the previous low. Okay. Then a higher high. The reason why is because this high is higher than the previous high. So higher high, higher low, higher high, higher low, higher high, and so on. So here we begin from a high. Okay. Then we go to a low, then a lower high. This high is lower than the previous high. Okay. Then a lower low, because this low is lower than this low. So and so on and so forth. But also we mentioned something that is called break of structure, if we can remember. I think I can even use no. Yes, I can use this tool. So what happens is when price closes, you see, as the market was going on an uptrend, price never closed below the previous low. So when this happens in the market, it is an indication that price might be shifting to the downside. Okay. And now this this area, this this region, um, this what happens here, this this is what is called where is our checklist? This is what we call distribution. Okay. So when the market is shifting from an uptrend to a downtrend, what is happening here? You see what is happening here. So we have a break of structure here, remember? Okay, we have this break of structure. So what is happening here? Uh, no, sorry about that. This is not at the right place. What happened here? This is where the structure broke. Okay, so what happened in this zone? This is what is called. It's just a fancy name, but it's called in the circles of forex. It's called distribution. Something to help us understand, you can write this down. D meaning it's going down. It's coming from, okay? I don't know. I think that can help. It helped me understand this. I try and come up with, I don't like cramming, so I try and help myself understand, and I use such simple things. So, distribution, price was going up, it will start going down, okay? Then accumulation is the opposite. So, we had what is that thing? We had we had a high, low, lower high, lower low, lower high, lower low, lower high, lower low. If you notice, this price never breaks, never when the market is trendy, is trending downwards, price does not close above. So when now price closes above, it's this kind of this one, which is now inverted. So you'll find that at some point in time, after the trend has been downward, that the market will give us something like this, meaning that for the first time, price has closed above. Okay, price has closed above this. If you check these others, this one didn't close above this lower low didn't close above the previous lower high didn't close above this one. So for these ones, this anomaly and this new um, or change in characteristics gives us a hint that price might, it's not guaranteed, that price might be shifting to the upside. So and what this is, let me just make this a little bit neater. And what this is called is where is that thing? What this is called is accumulation. Okay, and something that can help us. I know I have a lot of these things. Something that can help us remember. If you stay with me, you'll start being, I don't know. I'm not artistic, but I try and look for ways to help me understand. So A, okay, accumulation. All right. A is accumulation. So how I was able to know this is I just added this and it was an arrow to the upside. Um, Clap for me, guys. But on a lighter note. So the difference is, I'm sorry about that. Accumulation is the shift of the market to the upside. Okay, remember the A, accumulation. Then distribution is down. D, D for down. Okay, okay. If this is making sense, uh, comment in the comment section. I know we are not such a big number, but people will keep joining us. So if this, welcome, welcome Charles, welcome Winfred. Yes, we can introduce ourselves at the end of the class. If this is making sense, kindly let us drop some comments in the comments section, and yeah, we will progress. Or if you need a bit more clarification on the same. Hello, are we together? Silence means that either we have understood or we are clueless. So kindly just comment and mute and say something, then I will proceed. I don't want to call names, but it's like you want me to force. Uh, Anyone? Okay. Ian has understood. I am lost because I missed yesterday and came late. Okay. Just joined. I can repeat. Let me just repeat. This is not tied to yesterday's class yet. So this is just built on the previous day. But in case you missed the classes, the videos, I am yet to share them in our group, this group, okay, the support group. But what I will, oh, okay, you managed to join, Charles. Okay. So, I have uploaded all the videos in our YouTube channel, and you can go and check. In case the link is also in the group, but I will try and pin them. So I will check that again for the ones who have joined later, and then we will continue. Okay. So just allow me to redo this. Just a minute. Um, just give me a minute. I'm checking something. and then we will take it again from the top. Okay, that is okay. It's in order. So let me just highlight all this. So in case you want to delete everything that you have on the chart, I think you press no, you press control, and then you highlight everything that you want to get rid of, and then your chart is clean. So I'll just take us again on what accumulation and distribution is. So we are building on what we learned on Friday, okay, on structure. And yeah, so in a bullish structure, or when the market is upward trending, or you can also say when we are buying, buyers are stronger than the sellers, so we are just looking for buys. This is what we look at, okay. um I am not an artist, please forgive me. uh but yeah, so this is what we normally look for. Then when the market is selling or going down, I will just highlight a few things to help us remember in case we have forgotten. This is also how the market looks in general, okay? So if we can remember, uh, we have a series of, we start at a low, then price gives us a high, then a higher low, because this low is higher than the previous low, okay? Low, higher low. Then it gives us a higher high, because this high is higher than this high. So that's why we have higher high and higher low. So that's how the market looks, okay? Normally. So let me first deal with a bullish market. So every time, if you notice, this low never closes below the previous low. The same with this, the same with this. So if this is consistently happening, it means that the market is going to continue to buy, most probably. This is a game.
I
It's
can't get you clearly. Your voice
Sure,
is not clear.
you're
uh,
breaking up.
okay. What about now? What about now?
You're a bit clear now.
It's okay.
Okay, okay. Let me just start again. So when the market, every time that we see that this low, okay, did not break the previous low, did not close, this can actually happen. Let me show you. If this happens, uh, let me get rid of this. At times, this can happen, okay? So if this, you see this low does not close below the previous low, what that means is the trend will continue to buy. At least that's what the market is telling us. It's not guaranteed, but there's higher chances. So now there are times when, let me use this other tool. There are times when this happens, when now price closes. You see, it has broken the structure. This is a structural point. So price closes below this, and then it gives us, when this happens, the market is, the market communicates. So what the market is communicating is that now structure might be shifting from a bullish to a bearish, okay? So what is likely to happen is that then the price will continue now selling down, okay? Now, what distribution is everything that is happening in this area. Everything that is happening, where is this thing? Everything that's happening in this area, okay? This is distribution. And here we saw that there was a break of structure. You remember from our first class, break of structure. So the structure has broken from bearish to now bullish, okay? From buying to now selling.
You're breaking up.
I'm breaking up again. Hello?
Your voice is a little bit shaky.
Okay, just give me a minute. Is it any better? Hello?
It's still shaky. Still shaky.
Okay, I'll leave and join the call again. You are struggling to hear me. Is that the case for everyone?
Yes, it's the same case on my side also.
Okay, so then it's my network that has an issue. Just give me a minute and I'll fix that. Is it any better?
It's a little bit better now.
Okay, okay. So we have understood up to this point, right? Price has given an indication that there might be a shift to the downside. So what distribution is everything that's happening in this box that I have highlighted, okay? And how to know what the difference between distribution and accumulation? It's just the same thing, but now one is distribution is for a bullish market turning into a bearish. So a buying market.
Today's connection seems bad.
Okay. Uh, I do not know what the issue is.
Your voice is shaky. You're not clear.
Let me drop, then I join again, if that's okay. Then I'll share. Hello, guys. Hello?
Hello.
Is it better now?
Yeah.
Okay. Sorry about that. I had to switch off everything and start over again. So I will just continue. Okay. The class is supposed to end. Is the screen visible? Kindly let me know. Can you see my screen?
No,
Okay. Just a minute.
it's okay now. We can see it.
Okay. Thanks. So as I was saying, when accumulation is just a fancy word for when the market is turning from buying to selling. Okay. So what can help us know what distribution is, I was saying, is so everything that's happening here, this is what is called distribution. Okay. So I was saying that distributions begin with D and also down begins with D. So for you to differentiate between distribution and accumulation, now this is distribution. Why is this distribution? Okay, we have now the reasons, but for us to remember, D down, the market is coming from up to down. Okay, so that market will begin going downwards. And then that's just my own way of trying to understand things that at times are a bit confusing. Then the same when the market was on a downtrend, you can see that this low, this lower high, okay, did not did not break this one. The same with this and the same with this. So structure was respected. But there are times after the market has been selling for a while, then the market will change. There will Now we will have more buyers than sellers. So this is what happens. So there's a break of structure to the upside, and then there's that, and price gives us this. Okay. So um let me highlight this again. So what happens here? What happens here? These things are what happens here is called accumulation. Okay. And something that can help us remember now the difference between accumulation and distribution. I drew an A. This is not part of the class. It's just to help us now to differentiate the two. And then I put this. So it was an arrow to the upside, meaning that accumulation, now price is pushing upwards. Are we together up to there? Guys, are we together? For those who had joined late, or Charles and a few others. Charles, do you at least now understand a bit? Okay, okay. Thank you. So let me progress. So something else we're going to look at is this is now another term that we will have to go to check out. Let me get rid of that. We'll have to go and check out on Wikipedia. I had already searched this for us. So price is fractal. You can write this. Price is fractal. I will explain what all that is. What it means is all the time frames are in sync. So whatever is happening on the higher time frame is also happening on the lower time frame. So let's just go to Wikipedia, and I think there was a better definition somewhere here. Fractal, a curve or geometrical figure, each part of which has the same statistical characteristic as the whole. So it's not an exam, no pressure, but it's just a term that is also used for us to understand. So what this means is, um, I will just draw our structure again, okay? Just give me this path curve. So market was buying. This is on, let's say, the daily, okay? This is on the daily. This is on the daily. So you'll find that what is happening on the daily time frame is also happening to this smaller time frame. That's what fractal means in simpler terms, okay? So you'll find that in here we have low, high, low, high, low, high, low, high, low, high, low, high, then price block structure. So high, low, high, low. I'll just expand this once I'm done. I'll just use this to show us. So in this big daily, this is a candle, right? This one candle has smaller time frame. So whatever is happening, you see, like this move, we have the same move here on a lower time frame. So that's something else that, and what this will help us is it will help us to get entries into the market. So I just remembered I messed up big time. Let me see if I can retrieve all the things that we lost. Okay. So now our focus is we want now to start taking our entries, placing orders. For those who have not traded before, now we have built all this knowledge bank, and now we want to start taking entries. So what this fractal knowledge help us to do is, you see at this point, so price broke structure, then you remember mitigation theory. I think that was yesterday's class. Was that yesterday's class? Yes, those who didn't attend, you'll have to attend, then you'll combine this with it. So what mitigation is? Mitigation means loss reduction. So when smart money is coming back to mitigate the positions that were in drawdown, as we had said yesterday, we need to see the same you see at this point, and this point, before now price goes down, it broke structure, then it comes back to retest, as people call it, or mitigation, as smart money traders we call it. Then it gives us this downward move. So now with the knowledge of fractal, you see all this play that happened here. Let me now draw it even here, it will be better. We might need to watch this a number of times. So price gave us this, and then it broke structure. No, that's not it. That's not the right tool. Okay, then it broke structure, then it came back to mitigate, then it came up, then down, then up, then down, then up, then down, then up, then it broke structure, then it gives us this and that. We will check this now on lower time frame and on the actual charts and get to see even if we might not really. So this, we need to see the same. Can I move this whole thing? Okay, just making things worse. So you remember we had this, we had on the daily, we had this, then price gave us this, and then it came back to retest, and then it gave us this. So on the lower time frame, we need to see the same move. So price is buying now from this point, it's buying up. When price reaches to our, let's say, the mitigation candle, as we said yesterday, or the imbalance, or there are a number of more that I can probably share in other videos, but in one of the places where the banks, you remember, smart money is the big institutions. So when price is coming back to this zone, when price is coming back to this area, okay, let me change the color of this to yellow. And so when price is coming back to this region where there is the smart money candles, we need to see the same, you see, this same move needs to happen here. So let me try and expand this for us. It will not be picture perfect probably, but let's see what we can do with this. So price was a high, was a high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then price broke structure again. Escape. Then price here broke structure again. So what this is called, it's just the same as this, but now it's like a double confirmation. It's a redistribution. Distribution happened here, okay? Distribution happened here with this down move and the break of structure. Now we want to see the same repeated move for us to have a double confirmation, because at times you'll find that the market will do this. The market will actually do this. Uh, the market can do this. The market can the market can do this. So it gave you this move, okay? And you are sure that now a structure was buying, then there was a break of structure, so we are anticipating a sell. But what the market can do is the market is the market. It does what it wants. It has a mind of its own. We don't trade what we think, we trade what the market gives us. That's why we have these confirmations. So instead of let me see. Instead of the market gives us that low, high, lower low, lower high, lower low, lower high, then it breaks structure. So what you expect is price to come here and then reject backwards. But at times it just continues. Okay? Then now comes here and now continues. So this is, so if you had already seen this, if you saw this one and you thought that now price will keep going down, it doesn't always happen. So for us to avoid being caught on the wrong side of the market, we wait for a double confirmation at, I know today's class might be Greek to most of us, but kindly watch the videos and we will get. So you are waiting for price to come here, okay? The same way as it did here. You remember? So price price broke structure, price broke structure, okay, this arrow. Then we were anticipating for price to come to this order block and continue on a downtrend. But now the market is the market. So the price might just continue buying. So for us to minimize risk management, risk minimization, whatever you want to call it, is what will keep you long enough in this market. You'll go, you look for $100 right now. Just a minute. Right now, $100 in Kenya is 14,400, 14,500, somewhere there. In Ghana, where our friend is joining us from, you'll find it is, you said it's 11, so 11.5. Ignatius, who left the meeting. So in their currency, it's 11. Oh, he's back. Is 11.5. So times 100. So you've really looked for your money and all that, but everyone is in business, and you'll just have to go and look for some more money and fund your account. Then you'll be frustrated time and time again. This happened to me when I was beginning out in trading, and we're all learning. We have not gotten there. You never get there in trading. So I am done with today's class, unless there are many questions, which I know we might have. Tell me, guys. Are we getting? Are we understanding? Or
I would like to ask like the bare definition of association and distribution.
Accumulation.
Accumulation and distribution.
Um, it is a series. It's a process. Um, where I think you can take. Let me just write it down, then I share with you. So the things that happen. I don't have like a definition for that. I think you can get one online. I didn't. I just want us to understand the concept behind it. But things you need to check. Okay. So price break structure. If it was buying or selling, that's the first thing you see. Okay. Then let me just go back here. Then comes back to mitigate the order. So if you are not in the class yesterday, please go and rewatch yesterday's class. We did mitigation theory together with institution candles, and we will build on that even today. So the second thing is this price coming back here is called mitigation. So that's the second thing that needs to happen. Then the third thing that we look for is now at when price is at this is we call this our point higher time frame point of interest, HTFPOI, higher time frame point of interest. So we have already marked out that we are anticipating for price to start selling from this zone. So now when price is at this zone, there are things that we check. Okay, and we will go deeper and look at that. So price comes back at that zone, then you go to a lower time frame. Let's say you're doing your analysis from H4 going upwards to daily to weekly to monthly. You can actually do your analysis even from an yearly time frame, and just one candle is 1 year. So but now it's a bit hard for you to take these many opportunities that the market avails. So you look for now the same play. You remember price will come. Then at this point, let me just draw that for us. At this point, so price came. Let's say that's 4 hours. Okay, so it won't be many candles. Then at this point, it broke structure. Then gave us the same mitigation. I don't know if I'm answering you, Ian. I don't think I'm answering. But if you want a definition, I can look that for you and probably share even during the class or after the class. If it's but it's just the idea behind it. Yeah. But if you really want the definition, I'm sure I can get that for you. Any other question? Have we understood anything? What is the percentage of our understanding? The definition that I'm seeing, on I shared also something yesterday. If you're really new to Forex, you can open an account with it's like an encyclopedia for trading. It's called Baby Pips, and it has amazing content. It helped me a lot to know all these terminologies. But they're saying that accumulation area in trading refers to a price range in which smart money starts to buy a security in large quantities over a period of time. So that might not really give you, but that's the definition. But now the explanation is what I have shared. But the definition, if you want a definition, is a price range in which smart money, what we're doing, because now we are smart money traders, starts to buy a security in large quantities. So, for example, what that definition means is it is this area where smart money starts to buy, or this area where smart money starts to sell to the downwards. So that might help. But kindly, you can for those who are not on the call yesterday, and if you're new to Forex and all these terminologies are overwhelming you, you can just log into Baby Pips, and yeah, we will we will learn. We'll keep learning. I can't give us everything. We also need to go out there and do a bit more. So Any other question? Is your question answered, Ian?
Yeah, you've answered like the most.
Okay. Any other question? Have we understood anything? I'll just go one person at a time. Charles? A yes or a no will do. Okay, anyone can go. Kate?
I've gotten some a rough idea of what Forex is all about. I think
Okay.
I need to continue going through the notes so that I can understand better.
Okay. Kindly rewatch the videos. When I was paying for I paid for mentorship. At some point after I was so much frustrated with losing money, just said, this thing, it's either it works. So I am a risk taker naturally. Um, I also play the guitar, and when I was learning, I paid some guy in US sometime in 2018. I just paid them. If it works, it works. If it doesn't, it works. So that's how I am naturally a risk taker. So I just paid for this, and I had to watch videos. You sit with these videos for long. I'll keep sharing more and more. But yeah, at times you won't, unless you have had a bit more of understanding. It will be a bit hard. Welcome, welcome, Michael. Anyone else? I'm seeing Charles is saying, yeah, uh, yeah, where you got lost. Sure, sure, no problem. Anyone else? The others are real quiet. Julius, Ignatius, Winfred. You can chat, you can comment. Then we'll go to the next thing. Okay, people don't want to talk. It's fine. I also decided and keep quiet, and we'll see. On a later note, I am not one who catches easily. So okay, so the first two are done. All right. Let me just I wish I would be able to highlight this in a different color, but it's okay. Let me see if we can. The first two are done. Okay. Mm, so we've been studying smart money. So we need to have a checklist. A few things we need to do every time before we see or take a trade. So SMC, smart money, traders, smart money, checklist. Okay. Before you take a trade, a few things to check. The first day. Now here is where everything comes together. Okay. We will have to go from the first video and go all the way to what we are doing today for us to have a feel of this. Everything is now coming together. So the first day we did structure. So you establish if the market is buying or selling, simply. Then it might not be so simple, but with time we will. But yeah. So the second thing we check is range. So moving forward, even I want to encourage us, just take one. This is like the asset. Just search trading view. I can share this in the group right now. Let me excuse just a minute. Let me share the link, this link in the group. I hope everyone is in the group. Uh,
Yes, I'm in the group.
okay. So that's the link to the trading view. This is binary trading view. And then we have another kind of trading view. This is for synthetic indices. I began with synthetics, and the good thing, it really helps you if you work an 8 to 5 job and you just have the weekend. The market for synthetics is open throughout the week, Monday to Monday. But when it comes to now currencies, um, it's only opened from Monday to Friday. So you see, when you have time, now the market is closed. So this really helped me a lot to get an understanding of the market, and the money is still there. So Okay. Let me just comment because you guys never comment anyway. Sijakach, by the way. I have not. I don't feel, but anyway. So, uh, you can find the links
I'm,
there. Okay, I'm hearing. Is someone trying to say
I,
anything?
I'm, I, I was saying I'm going to comment now.
Okay. Thank you. Uh, just put those emojis, those fire emojis to create a bit of noise in the group. So that's the second thing, range. Then the third thing, we're going to look. So I was saying, let us, if I should have said this in the first class, but you see, when you go and rewatch the video, or even if you still remember the things I have been teaching, mark out structure. Just send it in the group, okay? Then I'll say, okay, this structure is okay. You missed it here. Probably change the line, change from candles to line graph for you to be able to get a better understanding. I know this bootcamp is free, but it being free doesn't mean it's cheap. I think there is the tendency to confuse the two. So the information that I'm passing is really valuable, and if we just watch the videos without actually going to the chat and trying these things out in the chat and just sharing, I will get back. I work also 8 to 5, and I said something also some time back. If you're new to forex and you're learning, unless if you're in school, I hope I began this when I was in campus. I'm done with school. But when you're in campus, you have a lot of time. So unless you're in campus and your parents are catering for you, but if you're working or you need to pay your own bills, for example, and you find your account with $100, you'll end up taking crazy risks because now the landlord is knocking at the door. The house has been locked. For people in Kenya, the landlords lock the houses, so you'll end up taking risks that you will not have taken before. So that's also some advice. Then the third thing, so yes, let us start sharing. You just mark up, you can use your phone with the same link. I think TradingView, you can download this one. They have an app. The second one, they have an app. The second link I've shared in the group, they have an app for this, and it's really effective. And then you just rotate or you put desktop view, and you are able to, on the phone, you are able, I began using a phone. So if you have a laptop, well and good. But yeah, don't feel limited. Your phone can stop being a liability, eating your money and start giving you money. The other thing we look is liquidity. um Liquidity, this is where we said liquidity equals money equals stop loss. This is where traders are placing their money, anticipating for price to move from there. Then you find that now these big banks come and capture their money, capture this money that the retail traders have placed because they need the money if to push price up or down. You can watch the video on liquidity as we shared yesterday. Then the fourth thing is banks, where these banks are hiding. The mitigation candle, the order block, the smart money cube, the imbalance, where where these people are sitting. And the fourth one is the Fibonacci. The fifth one is the Fibonacci. Okay, sorry that way. Fibonacci has a single. It's other. Okay, Fibonacci tools. Okay, or tool. So this is the checklist that we use for smart money. I think it's either all of it or none of it. But anyway, so this is the checklist we will use. This is the third thing in this call. So we check for structure, then we check for range, we'll check liquidity, then banks, then Fibonacci tool. So I will begin with this asset. Then there are some two people who requested some assets that they've been looking at. I have been looking at this asset from January. It's called VIX 25. I have made some money, lost some, but yeah, we are grateful in all things. So, guys, I know it's a bit hard for us to have an interactive class, but I'll just see how I'll try and make it more interactive. So if we, let's just begin from around here, okay? If that's okay. So market was from here. Market was, I'll not mark all the points, but just a few. So from here we had this. Assuming that was the low, price gave us a, guys, this was a high. Uh-huh.
Lower low.
Okay. Then this was
Lower
this.
high.
Okay. So this will be the lower high. In this case,
Mm.
there are a lot of things because it's a higher time frame. Um,
Mm.
then we'll just mark these two for understanding purpose. But as we move on, but there was all this. You can mark all this depending on what you're looking at. Yes. I have that in mind. And you're being announced. I have put I have put notifications. So even if you chat me in the Telegram group, it's announcing you. Anyway, uh, so this was what was happening. Then we had this and this and this and this and so on and so forth. Allow me to go to a lower time frame, let's say 4 hours, and try and see what exactly happened. Um, so that we have a clear break of structure. Kindly mute. Kindly mute that for us. It's a bit of a noisy something. I'm not sure who that is. Okay, so this is better. 4 hours will give us a better view. I'll just edit this. This is okay. Press give us this. There was also this here. Okay, we can say that that happened. Then press give us that one, and so on and so forth. But that's not our focus. Our focus will be more of from here. Let's say from here. Okay, so that press give us that. Then it gave us this low. Then it gave us this high. Let me just make this a little bit more visible for us. So the same. This is a high, then press give us a low, then press give us a high, then press I'll skip some, press give us this low, also this high, and so on and so forth. Um, delete. So press give us that, then it give us this, then press give us that, then it give us this, then it gave us that, I believe. Uh, yeah, then press broke structure to the upside. Let me just look for a clear. So this is our area of focus anyway. From a higher time frame, this is where price stand from. Just give it a minute. Okay, so let me share a few things, a few photos of a few trades that have gone to my favor. I'm not sure if these are the ones, but let us see. I think these three should do. I've shared some in some groups. Some people took the advantage and they benefited. I don't know what's happening with this specific. This is VIX 25 actually. It was a trade I took I think last month, and I was in the trade for I think 12 days, if if I'm not wrong. Uh, Let me just so this is where I found the price. Um, this is where I found the price. So this thing works. You don't have to take many trades. One trade can give you money for 2 months. If that makes sense. No, that's not the right one. Yeah. So I had marked out this as my POI, my point of interest. Okay. I will show us this. It's volatility 25. Okay. The same asset we're looking at. So I found out that there was this liquidity sweep, and then there was this move to the downside, but so this would have been the range. I don't know if we have leading tools here. Anyway, you've seen this, sour. So let me just go to now what happened. I believe this move was this one. This move was this one. Let me just mark it out. Then we can look at it from now. Okay, that was the move that that played out. So let me go to the same time frame, the 4 hours, and just show us how these things are actually, you know, these things are not just hoax or something. So it's things that are actually happening. A mentor of mine said that even if you take the price, the changes in the price of dogs, like if you're able to quantify that this year, let's say a Chihuahua or a Bulldog was costing this, and then you are able to quantify anything that has candles. Um, this our so as I had said, there was a down move here. There was a lot of selling, so let's just that mark out that. Okay, there are many more that I'll share a bit later. Let's just take this, and then Price gave us this one. Okay, for learning purpose. There's a lot of this is just this is what is called, I don't know if you remember when I said that there is three types of market structure. There is bullish, bearish, then there's a market that we don't trend. It's called um, a ranging market, or it has a number of terms, but it's just ranging in here. So you're not sure if you need to see a few things. So the structure was buying, it was selling, as you can see. Then from this point, market broke structure. Okay, market broke structure and gave us a new high. Okay, so remember our checklist, guys. Sour. Let me just, I think I need to probably pull this somewhere. It's really far. Okay, that will probably help a bit more, having it near. Yeah, so there was, we established structure had shifted from bearish, structure had shifted from selling to buying. Just a minute, I think I'm talking for so long. Then structure had shifted from selling and now it was buying. So we need to establish, the second thing is range. So where is the range? When price begins coming down, then it has given us a new higher high, and this was our previous low range. Okay, if we can we do something to this? So this is the down range. This is the down range. You can just take your time. It's your thing. Do your thing. Okay? So that's the down range. And then this will be our top range. No hurry. Enjoy. You know. This is the top range. But you don't have to do this if you don't have the time. You know, people are busy and all that. Okay. Let me edit this. Let's make it perfect. We want it to be at the bottom. Okay. Looks nice. Clap for me, guys. Anyway, so that was the range that I was. So I found the market. I found the market here. So I found the market. You see, I found the market now here. And as we were looking yesterday, there are few. Now the third thing. So the second thing is range. The third thing is liquidity. So I found that if we go to a lower time frame, which I think we should, we will see a lot of liquidity where retail traders are anticipating that the market will turn from. Okay, let me show us this. It's taking time though. But the good thing is I made money after years of losing to the Forex market. It's painful. Losing money is painful. I can tell you. Money that you've worked for or saved from your parents' pocket money. Because I began trading when I was almost done with campus. This thing, but it's not cooperating. It's not cooperating. Let me save this as Issachar. You can actually save your charts and just search them once you're back. Because now I'll have to refresh this. So this was the trade. The entry was really risky. I think I took it on a 1 minute or some crazy time frame. Anyway, this was the entry, and I think I exited the trade way later. This was how it looked. I don't know why it's doing what it's doing. As you can see, this was the move that I captured, but it's not showing, and I don't think we can access that small difference. So that is an example of a trade that played out. So you come to load charts, because now it's acting up. Then you can find your chart over there. You'll also allow me, there is something that Ignatius posted in the group, if we can remember. So here is where I found the market. I just wanted to show us that thing. So you can check, you see, after you've established structure, now you can go to lower time frame and try and look for these other things like liquidity, where smart money is sitting, all those things. So there was there was a lot of liquidity. That was all this, you see, all this was liquidity that was here. This was also liquidity. This was also liquidity. And finally, all this is where traders are anticipating for price to turn from. So they have their orders placed at all these points. Different traders, okay, anticipating. Everyone is everyone is hoping that they'll be in this move, this upward move. You see this move, this sweet move. Look at that move. Look at that move, guys. Look at that move. So everyone is anticipating, but not everyone will join the party. So there was liquidity that was the third thing is liquidity. Liquidity was captured, okay, in our checklist. Then liquidity was captured by by this this downward move, okay, by this downward move. Um, Liquidity was captured by this down move, this one. It captured this final liquidity, okay. Then price broke structure. So let's go back to structure. So remember what is happening on the, you remember the fractal nature of price, what we were checking for on the daily, now we are checking it on 1 hour for us to also pick entries from there. So the same thing, price is selling, so high, low, high, low, high, low. Then what did price do? Price broke structure here, okay. So this is a double confirmation now. So we wait for price to come back to this zone, anywhere in this rectangle. Then now we can place our order or take our stop. So are we seeing this thing in real life? I don't know if I'm able to explain that in a way that's understandable. Julius, you want to say something?
No, I'm okay. I'm okay.
Okay. Are we together?
Yeah.
Okay. And the remaining three people, Ian, Kate.
Yeah, we're together.
Okay, so that's an
Together we
example.
are.
That's an example of one trade that played out, and I was in the trade for, I think it was 12 days. I'm not sure, but it was a good trade, and I closed it because I had issues with net, and I will not be able to track it. But it changed. So I took the trade here. I think the date, I'm not so sure about the date, but the trade was, I think, the start of this month, and it went all the way to here. So it was a trade that played out. One of the trade. Then Julius had posted and requested that we look at so do this, guys. You see, after this bootcamp, just go and look for one, or at least have a maximum of 3 and a minimum of 1. Obviously a minimum is obvious, but don't have so many currencies or assets that you're looking at. Just look at one or two. So his currency was I think US dollar, JPY. um this is Forex. I think my network is a bit slow for whatever reason today. I do not know. So the market is not open. The Forex market will open today, later on in the night. But let us see this. So these are some of the assets that I've been looking. Your markups are just saved, and you can come back and look at them. So he has shared this in the group. Uh, he had shared it here in the group, and he's looking to sell price down. Okay, so the asset is, you can see, it's what's it, watermark, USD JPY 2 hours. Okay, so that's what he was looking at. So we will look at this. Let me just tell him. um uh, I've seen his left. I misspelled his name when I was saving. Ignatius. Can you hear me, guys?
Yes.
Okay. All right. For him to just be able to, I think my network isn't strong as it has been today. Oh, so I had marked this out for him, but let me just get rid of everything, and then we can look at it afresh. Okay. Delete. So I began my analysis on, was it the monthly or the weekly? So to see how US dollar, Japanese yen has been behaving. Okay. So from this is how the asset has been acting up. Okay. I think it was monthly. It must have been monthly. So we begin from, as I don't normally do this, but now uh, it's good for us to begin from a higher time frame, then come down to lower time frame entries and see. Uh, so uh, uh, so let's just mark this as we normally do, if you're okay with us. So this is high, low, okay? Anything with candles, high, okay? Then low. We won't mark a lot of them, and then low. Then now notice a few things have happened. There's a lot of things that happened here. There was when we now go to the details, there was a break of structure that happened here. Then price came back. So we will look for areas of liquidity just to show us if this is our range on a very higher time frame. Okay, if this is our range, if this was our range, let's mark this out as our range for this asset. This is an exception, I know, but let's just mark this. That's the top range, okay? And then this is our down range. Okay? So everything that's happening in here is happening within this high and this low. The reason why I've done that is because now price has already broken this, but it has not yet broken this. So there was liquidity that smart money captured on its way up. Let me mark this out for us. So a few things might happen. A few things might happen. And let me see. There was also, this is an imbalance for those who are able to attend yesterday's class. There was an imbalance here. This was in the last time that price was here was in 1990. Okay, so we have the liberty to even go back in time when some of these things were beginning to trade. So this means for if this holds, the structure is on the higher time frame, the structure is still, the structure might actually sell as he had predicted. But now for us to have final entries, we need to know that if let me just go back to that image. If we take our sell, he's looking to sell from this point. So if we take our sell from here downwards, then then this might happen. This might happen. So we need to have, so we've already established that there was liquidity that was swept on a very, very high time frame. So if you're able to identify structure and POI, point of interest, at a very high time frame, then you might ride this. You see, like this move, it was here for from 90 1990 all the way to 1995. So if you're able to capture this move from this point, you can be in this trade for 5 years. Yeah, that can happen. On a lighter note. So now we've already established that we are looking to sell, but now we need to, you remember the distribution and accumulation. So we will go now to a daily or a more simpler and easier time frame to work with. That was monthly. So when you go to daily, what is market giving us? Okay. So on daily, uh, and my sentiment was price will probably, the price was here, but I had a feeling that price will actually keep buying a little bit more. I think the market in Japan has already opened because I'm seeing like it's moving. I'm not so sure. No, not yet. This is Friday. So what might happen when the market opens is, let's just mark out now on our daily. This is now our new range. Okay. This is our new range. I don't trade this asset though. I trade Euro USD and Canadian and Great Britain pound versus the Canadian dollar. So this is the range, okay? Then price has given us a few things. No. Okay, this was, so price was buying up, then price broke structure. Okay? Remember, structure is king. Price broke structure. Let's just say it broke structure over here. It has broken even, and this is daily, okay? So price broke structure over there. Then now smart money is coming back to mitigate. So a few things that we need to note: there is liquidity that has already been captured. There is liquidity that is here. This is liquidity that can be captured fast by these our guys before they, now they start selling down. But this sell, if you're in this sell, if you manage to catch this sell and take it well, then you might be in for a really long time. So a few things that we can look for where price might turn from. There is, you remember this liquidity. Where is that liquidity? This liquidity from the monthly. Let me just extend this for us. There's liquidity that's sitting here. There's liquidity that is sitting here. Okay. Liquidity that is sitting there. Oops. Yes, there's liquidity that's sitting there. Where is this thing? There's liquidity that was sitting there, and there's this. Why isn't this? Isn't it letting go? It's not letting go, guys. It's messed up. But anyway, so there's liquidity that has been captured here by this candle. Okay, so I am looking for, if I'm going to take a sell down, I would advise that we take the sell from, where is the rectangle in this thing? Just a minute. I'm looking for the oh, I have it here. So price will probably turn from this point. Because if unless the market gives us another indicator that price will not reach there, but if we take our sell from this area, we might be exposing ourselves to so much. I'm seeing a lot of liquidity here, so smart money will probably come, will do this before they sell. I'm seeing that smart money will probably buy a bit and then sell. This is path. So what I'm seeing might happen is we might have something like this, then this, then our downward. Now price will just keep going down. So that is it for now on this asset. Are we following? I don't know if I lost us. So that's what I'll be looking for JPY to do. But if one is able to be in this trade, I might consider taking it. At times you don't have to know everything, but yeah, you can benefit from the knowledge that others also give. So I can take advantage of that. If it aligns my with what I might be looking for, I might take this, and then we will have some good money to then, and this might go. You know why? If this goes down, you know what we're looking for. We're looking for price. Price might potentially get to. Price might potentially get to. All this is liquidity. Price might actually get to this point. I think my network has issues, but anyway, price might actually get to monthly. And this is not forex. This is not investment advice, because we've established that the market is still buying. It has not broken this one. The market is still buying. So a few things might happen. Price might come to this area, okay, and then give us an up move, or it might actually go lower than this. But that's not financial advice. That's just what I'm seeing the market might do. So cheers, and I think I am done. It's been longer than we anticipated. Any question? That's on Euro JPY. So for those who have joined a bit late, Joseph Kimondo and so Ignatius, that's what I'm seeing price doing. But wait, because I had asked you previously, where do you'll have so much exposure unless you're trading for smart money. This stop loss is so big. This stop loss is too big. So unless you get another confirmation, you can share even in my inbox in case you see probably on the 2 hours a break of structure, another break of structure to the downside. But I'm feeling that price might get here. There's a lot of liquidity that's sitting on daily. Let me just go to daily. On daily, we've established that there's a lot of liquidity that's actually sitting here, and you don't want to be on the wrong side of smart money. So, but it's a good analysis, and yeah, for those who will probably have funded by the time that the market will reach here, this can be just this coming week. Then from next week, market can sell down. And this is not financial advice. Don't say I quoted this anywhere. I advised you to go and sell your house and fund your account, and then now you're living. So yeah, this is what I'm seeing. Smart money might do. Okay, they might buy to capture all this liquidity. All this is liquidity. Uh, they might buy. All this is liquidity that's sitting here. Okay, so they might buy to capture At least I'm sure they'll capture this one. I'm almost certain. They will. The market is opening in a few hours. You can check this out during the week. And then now they might also capture this one. But try and just minimize your loss. If you have good money, you can enter with the minimum lot size when price gets to here. And if you have the confirmations we've spoken about today, reaccumulation and redistribution. So yeah, that's it for today's class. There's one more asset that I was asked to look at by our friend from South Africa. Fins. Yeah, it was volatility 100. I'll just do this, then we're done. I'll just share books we can study, and yeah. Then I will begin. I don't have a mentorship program, but I'm planning to begin next year, and it will be paid for. So take advantage of this. We are both learning. I'm learning how to mentor people and how to even be efficient in these calls. Then you guys are learning for free, something that I paid a lot of money to acquire. So this is my network is really bad today. Any comment? Anything? Even as we wait for. Hello, guys. I lost us. Today's class has been intensive. Ignatius, was that helpful?
Pardon?
Was that helpful? My outlook on USD JPY.
Oh yeah.
Okay, so you can just wait for smart money to capture this liquidity. After that, price might sell down, but also they might also go for this other,
Yeah.
because most traders will have
That's
placed
already
it.
tested the other block over. Yeah.
Yes. So you can check. Although there might have been a break of structure on a lower time frame here, so you can just.
Market can do anything now. So
Yes. And also the 2 hour markup you shared, unless now we wait for a break of structure here, then price let me just go to that image. Allow me, if that's okay. Unless now, because now it has created a new higher high, as you can see. If price breaks structure, you see this structure. If price breaks structure here, then we can anticipate for price to come into here, then sell down. That's also valid. So you don't have to wait. At least you won't have risked a lot of money. If you enter with a zero point 0.1 lot or whatever lot size, then you'll just lose a few dollars in case market keeps buying and you have to take the losses in the market. You can't avoid them. I take losses, but just ensure that your risk and reward is the reward is greater than the risk, and then you're good. So let me take a look. I think this is really not cooperating. uh yeah, I just want to look at a request that I was asked by Fee. Actually, just trying to remind me her name. It's escaping me. But yeah, the lady who joined us from South Africa yesterday. Mhm. It was volatility. So guys, please, for those who have not watched the videos, uh, kindly watch all of them. Then, even if you watched all of them, just ensure that